Welcome back to Capital Connection. Let's just run you through where the US markets closed. The mean 3% down is where we saw the Dow, the S&P and the Nasdaq. Concern about China in the Conference Board survey. Concern about consumer confidence closer to home, both hitting the market with the VIX rallying to around about 34–35%. Here we can see the opening calls for the European markets flat at the start of trading after a similar drubbing yesterday. Let's speak to David Costa, who is Dean at Robert Kennedy College. And David, thank you very much indeed for joining us. This crisis seems to have started, certainly in Europe, with concerns over bank lending. Given the fact that we always knew this deadline was coming up for the repayment of these one-year loans, the banks have got themselves in a mess of their own making, haven't they? We knew this was coming up. Why didn't they take action sooner?
A very good morning to you, Steve. Well, I think the market is again overreacting on this news of today, where the European Central Bank has to release some data on this refinance, which is coming up. The announcement should be at 11:15 from Frankfurt. So I think banks, to some degree, have been moving sooner. And the market is at the moment, I think, giving too much importance to this figure, which is coming up today. Sure, there are still problems ahead, but it's pretty much nothing new. So it's an overreaction coupled with all the bad news all around the world.
Well, David, very good to see you. This is Chloe in Asia. You're thinking that the cheaper euro is going to spell great opportunities for some of the European travel and leisure companies, given that millions of Chinese are heading out for trips abroad?
Yes, we have 90 million more Chinese going abroad this year. The figure has been increasing 3 times in the last 10 years, and so it's really the appreciation of the yuan, which is 18% toward the euro, creates opportunity for the long term in the travel and leisure industry in Europe, and not just for Chinese visitors, but from all around the world, because a cheaper euro will certainly give some good revenue on this industry. So it's not a short-term play, it's not a trading play, but on the long term, I think European leisure and travel companies will have an advantage and will be able to lure more visitors from Asia, but also from other parts of the world, which will benefit from a lower euro.
Hello, David. Let me jump in here. It's Yusuf from the Middle East. Now, there's continued concern, especially in North African countries, but as well in the Middle East in general, about the austerity packages that are being passed throughout the world and in Europe in particular, that would affect consumption and that would affect imports from their countries and hence would really alter the trade balance for them and make quite a serious difference. What are your thoughts on austerity packages affecting consumption? And I mean, this again begs the question, where is the global economic policy? Where is the coordinated approach?
Well, in terms of tourism, for example, the data from Egypt shows that despite all those measures in Europe, the tourism from Europe to Egypt has not been slowing down. So I think to some degree there is an overreaction, there is a lot of fear in the market. But let's not forget that, for instance, the US Treasury had the best 6 months in 15 years. So in this situation, it is important to stay still for the long run and to understand that fear shouldn't really overwhelm us. And when everyone is pretty much selling, it might be a good time to buy. So I'm still positive on Europe. I still think there are sectors which will give good surprise in the future.
David, thank you very much indeed for joining us today. David Costa from Robert Kennedy College.